Hey everyone, welcome back to the channel. Today we're breaking down one of the most important topics in personal finance, and that is credit scores. Your credit score can determine whether you're approved for a credit card, what kind of mortgage rate you get, and even your insurance premiums. But most people don't really understand what goes into a credit score or how to even improve it. And in this video, I'm going to explain what a credit score is, the 5 factors that make it up, common myths about credit scores, and actionable tips that you can use to raise your credit score starting right now. So stick around to the end of the video because I'll share a personal story about how understanding these factors helped me improve my own credit profile. So first up, what exactly is a credit score? Your credit score is basically your financial report card. This is a 3-digit number, usually between 300 and 850, and that tells lenders exactly how risky it is to lend money to you. The most common type is the FICO score, though you might also see the Vantage score. Both of these use similar factors. 800 plus is exceptional. 740 to 799 is very good. 670 to 739 is good. 580 to 669 is fair, and below 580 is poor. The higher your score, the better your chances for approval and the better rates you'll get. Okay, so the 5 factors. Now we're going to break down exactly 5 factors that make up your FICO score. First up, we have the payment history, and that's 35%. This is the largest factor. Lenders want to know, do you pay your bills on time? Even one missed payment can ding your credit score for years. Bonus tip here, set up auto payments for at least the minimum due. Next up is credit utilization. This is 30%. This is how much your available credit you are using. For example, if you have a $10,000 credit limit and you're carrying a $5,000 balance, that's a 50% utilization, and that's considered high. Experts recommend keeping your utilization below 30% if you really want to boost your score. Usually aim for under 10%. Okay, so third, we have the length of credit history, and this is 15%. To reflect the age of your accounts. The longer you've had credit, the better. You should avoid closing old accounts if possible, even if you don't use them that often. Fourth up, we have new credit, and this makes up 10%. Every time you apply for a new card or loan, a hard inquiry gets added to your report. A few inquiries aren't a big deal, but applying for a lot of credit in a short time can really hurt your credit score. Okay, and the last factor we have is the credit mix, and this makes up 10%. Lenders like to see that you can handle different types of credit, such as credit cards, auto loans, student loans, mortgages, etc. You don't really need all of them, but having a mix shows responsibility. Now let's bust a few credit score myths. Checking your own credit score hurts it. This is false. That's a soft inquiry. Next myth is carrying a balance helps your credit score. This is also false. You don't need debt to build credit. Closing a credit card improves your score. Usually this is false. It can lower your utilization and soften your credit history. And the last myth, you need to go into debt to build credit. This is also not true. Simply using your cards and paying them off works. Okay, so here are some actionable steps that you can start using today to improve your credit. Pay every bill on time, set up auto pay, keep your utilization low, ideally under 10% if you can. Keep old accounts open if possible. Don't apply for too many cards all at once. Consider becoming an authorized user on someone else's card if they have a strong credit history. If your credit score isn't where you want it to be, don't panic. Improvement is possible, and it often happens faster than you think once you build up these good habits. So when I started really paying attention to my credit score, I noticed small changes made a huge difference. For example, I lowered my utilization simply by paying them off an extra $500. It really boosted my score by nearly 40 points in just 1 month. And that's just the power of understanding how the system works. The credit score isn't permanent. It's a reflection of your habits. If you take control of those habits, you can take control of your score. Thanks for watching. If you found this video helpful, hit that like and subscribe button for more content like this on credit card points and personal finance. And I'll see you all in the next video.